Welcome back to the channel. Today we're going to be talking about how you can quit your job and live off dividends. Alright, so as we dive into this, I think it's really important to know exactly what a dividend is before we begin. So a dividend is a sum of money that's paid regularly by a company to its shareholders based off that company's profits. So it's basically a reoccurring chunk of money given to you by the company because you own that stock. It's pretty easy to figure out which companies pay dividends and which don't. But not all publicly traded companies on the NASDAQ or New York Stock Exchange or whatever other market pay dividends. It's kind of like a bonus companies give for investing in their company. So now that we know a little bit more about what a dividend is, let's talk about how you can determine how much that company is going to pay you in dividends. So generally when you're looking at a company, you're going to see the dividend yield. So the dividend yield is basically the dividend expressed as a percentage based on the current stock price. Basically the way the dividend yield is calculated is you take the annual dividend per share and you divide it by the stock price and then you multiply it by 100 to get that dividend yield or that percentage. So you can take the dividend yield and you can then determine how much that stock is going to pay you in dividends for that year. So let's take Toyota. That's a big company most people know, and generally they're known for selling cars. So we can take our cell phone here and go on to Robinhood, Yahoo Finance, or any brokerage that we might use to buy or sell and trade stocks. And we could look up the ticker symbol for Toyota, which is TM. And right now, the stock price for Toyota is $185.95. And if we scroll down here, the dividend yield is 2.20, which is expressed in a percentage. So that's be 2.2% is the dividend yield. So if we pop into Excel here, we can put that price of Toyota at $185.95 and the dividend yield of 2.2%. And we can do a simple calculation to determine how much money Toyota is actually going to be paying us through dividends. So then basically what we can do is just take that stock price of $185.95 and we'll times it by the dividend yield of 2.2%. And that will give us $4.09. And basically what that means is that every year for owning one share of Toyota at the current stock price, I'm going to make $4.09 off of dividends. And that $4.09 is completely passive. You literally don't need to do anything. Once you buy the stock, you're locked in, you don't have to do anything, and you automatically get those dividends. So a lot of people like this idea of making an income or making a living off of dividends because it's as passive as it gets. You invest one time and then you automatically get those dividends. You don't really have to do any work. You maybe will check on the stock price maybe a couple times every week or month or however often, but it really doesn't require any maintenance on your part. All right, so that brings us to quitting your job and living off of dividends. So you're thinking to yourself, well, hey, if I invest $185, I'm going to be making $4.09 every year. That's not a lot to live off of. You cannot live off of $4. So you might be thinking to yourself, well, I need to put a lot of money into that in order to make a significant enough income to quit my job. So we're going to tackle this in kind of two ways. One, we're just going to look up 5 high dividend yield stocks so that give you a good dividend based on the percentage. And then we're going to take the average dividend yield and compare the two. And that will then determine how much we need to invest in order to quit our job and live off of dividends. But before we continue, please smash the like button and subscribe. It helps me out so much. Thank you, and let's continue. All right, so before we dive into the math, let's kind of think about how much we want to be able to make an income off dividends in order to quit our job. So we're going to want to make enough money where it replaces our current job's income, or enough to where we wouldn't want to work for that extra money. So let's just throw a number out there and let's say in order for us to quit our jobs, we want to be making $90,000 in dividends every year. Not making $90,000 a year basically to do nothing Sounds pretty good. So let's just stick with 90,000. And then let's dive a little bit into the math. All right, so for that first part, to find those top 5 highest paying dividend yield stocks, I literally just looked up top 5 dividend yield stocks. And we'll just use this link to Investopedia. So it looks like here they're including 5 dividend yield stocks. And basically what we're gonna do is gonna take the dividend yield for all 5 of these and get the average to determine a higher dividend yield, right? To kind of do the math and explore this scenario. So here we have 10.69%. So going back to Excel here, we can do 10.69%. And then we have AGNC, 9.39%, so 9.39%. Then we have NRZ at a 9.12%. And 6.72%. It looks like this one went to dollars, so we're going to put that in a percentage. And this was 9.12, and we're going to show that. And the last one here is 6.38%. All right, so if we get the average of these here, we have an average of an 8.46 dividend yield percentage. We'll mark that in yellow. So this will be the top 5. So this is kind of like the top 5 average. And then this will kind of be just the average. All right, so it looks like the average dividend yield is about 4.17%. So we'll do average and we'll do 4.17%. So these are the 2 percentages we're going to use when determining how much money we need to invest in order to make $90,000 a year in dividends alone. Then we're going to make another column here for money invested. And for our 2 examples, so example 1, example 2. Let's say we'll just put a random number here, 30,000, and then this will be our dividend return here. And we're going to put this in terms of accounting currency. All right. So basically what we're going to do is we can do an easy goal seek once we set up these formulas here to determine how much we need to invest. So for example, if we invested $30,000 and we got an 8.46% return, we're going to make $2,538 in dividends for that year. And we can do the same here, times that by this, and we'll make $1,251 based off of this dividend yield percentage. All right, so this is what we're looking for here. We want this to be 90,000 so that we can determine how much here we then need to invest. So we're going to do a simple goal seek formula here. So what if analysis, goal seek, and we're going to want to set this cell, the return cell, we want it to be $90,000 because that's our goal. And so we want it to be 90,000 depending on how much we invest by changing that cell. So we'll go ahead and hit OK. And it looks like at this dividend yield percentage, we will need to invest $1,063,830 total in order to make $90,000 a year in dividends. And we're gonna do the same thing quickly here. We're just gonna do a quick goal seek. We want to set that cell to 90, we want to set this cell to 90,000 by changing, that's 900,000, by changing this cell here. So we'll have to invest significantly more than double at this dividend yield percent in order to make $90,000 a year off dividends. If you want to quit your day job and live off dividends, it's looking like you're going to need to invest at least $1 million into dividend stocks in order to make enough money to support yourself without having to work, or in order to justify quitting that job. Now that might seem like a lot, and I think for a lot of people that's probably not super realistic, not super achievable, at least anytime soon. So you're probably not going to want to get too excited, quit your day job, and think that you're going to be able to make a living off of dividend stocks. You're going to need to invest a lot first. And you're going to need that income from your job now in order to put that money into those dividend stocks. But overall, investing in dividend stocks is a great way to diversify your portfolio. Because along with getting paid dividends, investing in dividend stocks also has the potential for you to make money from the growth of that stock. If the stock price jumps up $100, you make $100 plus the dividends, which you could then either keep or reinvest into the stock. So like I've said, you're probably not going to want to quit your job over this, but it is a great way to diversify your portfolio and generate wealth. Alright, and before you leave, please remember that this is not financial advice and shouldn't be taken as such. It is for entertainment purposes only. And before you leave, please subscribe, smash the like button. Thank you so much, and have a great rest of your day.